Hello everyone, and thank you for watching my videos. Let's say we're watching the nightly news and we just discovered that a major company that we've invested some stock in has filed for bankruptcy. How would that make you feel? And more importantly, how would that make millions of people who are involved in that company feel? Well, you see, when we hear news like that, that can affect many different markets greatly, especially the Forex market. So, in this lesson, we're going to learn how to use the news to plan our investment strategies. Okay, so let's talk about why the news is important. Think of news as the fuel that moves the market. Everything that we've seen in the candlestick charts, the breachings of the support and resistance, the head and shoulders, the double tops, the evening stars and morning stars, the dojis, that is all tied into news reports. Because what happens in the news changes the moods of many people around the world, especially investors in either the Forex market, the stock market, what have you. So we need to get into the habit of watching the news and paying attention to all the news stories. Any type of news story that's tied into finance will help. And remember, the more we follow the news, the more of an advantage we get in this market. And that's the key, to use as many advantages as possible to make our investments more successful and to maximize our profits. Okay, so here are some dangers of trading the news. Now, some news stories are bigger than others. So when we have a major news story, here are some of the things that could happen as we are trading. Sometimes dealers will widen the spreads. So we want to keep that in mind. Any major news events, the bid and ask prices will be moved further apart. Maybe not all the time, but usually. And also, you might even be locked out. Locked out just means that your trade could be executed at the right time, but it may not show up on your list of open positions. So you might have to wait some time, because usually what happens is when a major news story breaks, many investors are so busy opening and closing positions. That creates a large amount of volatility, and maybe your trading platform or your broker, they're not able to handle large amounts of positions being opened and closed all at once. Also, that can lead to slippage. Slippage just means that because the price changes so quickly, you might enter the position where it says 1.1315, but you click. However, the price for you changes to 1.3158. So again, the volatility in the pips can also throw us off as well. So we have to watch out for that when we are trading in this market. Okay, so also we need to understand that big market moves by the news events, not often in one direction, but it can also change directions too. So oftentimes the market may start off flying in one direction and back in the other direction, meaning sometimes we have a news story that might cause the market to shoot up in a bullish direction. However, we don't have all of the information, but once people are beginning to make sense of the particular story, we have more information, then the market can go down back to where it was and then start to settle in the area where the market should be. So also keep that in mind. So we also need to know that there's a big difference between the rumor and the news. And rumors also create a lot of volatility in this market as well. Okay, so the most important reports. So now we're going to talk about the reports released by central banks. So here in this chart, we see non-farm payroll, otherwise known as NFP. Now, non-farm payroll, this information is released the first Friday of every month as the New York session begins. So many investors around the world, they are very busy around this time because the information that the American government puts out about new jobs being created, that causes the most volatility in the market. And then also trade balances and consumer price indexes as well. So we want to pay attention to what happens when the information gets released regarding these reports. Okay, so here's what we need to know about the reports. In addition to inflation reports and central bank talks, you should also pay attention to geopolitical views such as war, natural disasters, political unrest, and elections. So those stories also they also create a lot of volatility in the market. So it pays to study these stories. And also keep an eye on moves in the stock market. So whatever happens in the Dow and the Nikkei can also affect what happens in the Forex market as well. Now, how do we trade the news? Well, we can trade by using directional bias. Directional bias can be what the consensus says or what the actual report gives us. So again, we're dealing with rumors and real news. So you might have heard this term a few times in the market where they say buy the rumors, sell the news. That's what we're talking about here. And then also the non-directional bias, which means it's a more common trading strategy. It's the non-directional bias approach. And this just means that once the market moves in either direction, you have a plan in place to enter that trade. And we'll look at the charts in a few moments so you have a better understanding as to what I'm saying to you. Okay, trading with a directional bias. So here, the market has been ranging for some time. However, we need to be ready just in case the market breaks one of these lines. So again, we're looking at this chart and we're also reading news stories. So whenever there's a major news story involving this pair, we want to be ready. And also we want to think of a strategy and also think of the position we need to take in order to maximize our profit. So let's say we wanted to short this pair. Well, according to the information that we've received from both technical and fundamental analysis, and also news can give us some good sentiment analysis as well. We can plan our target where we can close the position and get the profits that would satisfy us, and also we know where to put the stop loss just in case we're wrong with our strategy. So, as we can see, we were right. We planned to short the pair as soon as the line of support was breached, and we take our profit. And because we set a pre-order to where the position automatically closes once our profit line has been triggered, we can enjoy the profit that we were looking for in that investment. Okay, so let the market decide the direction. What this means is we place two orders on either side of the ranging market. And once one order has been created, the other order has been canceled. So we're prepared for whenever the market shoots in an upward direction or shoots in a downward direction. And this is also a really excellent strategy because if you remember, the markets range 70 to 80% of the time. So when we see a lot of volatility in a market that's ranging, we should place two orders and have each order cancel the other once one of the orders has been triggered. So remember that. Now, sometimes you may get triggered in one direction only to find out that you've been stopped out because the price quickly reverses in the other direction. So remember, when we have a major news story creating a large amount of volatility, maybe we've lost that order because because your trading platform was not able to react to your order as quickly as it should. So there's also that danger as well. Now, the best chance scenario would be that one of your trades gets triggered and the price continues to move in your favor so that you don't incur any losses. Now, again, here's what we need to learn when we're trading the news. Large news stories create a lot of volatility. So when we have a major news event, it may be very difficult to get into the market at that time. However, when we hear rumors about what might happen, it's still really good to prepare for that by getting involved in the market when it's ranging. And instead of worrying about whether or not the prices will shoot upward or downward, we can be prepared by placing two orders on either side of the lines of support and resistance. So again, here's what we need to realize. Pay attention to the news. Use the information from the news to determine which strategy is the right one, and prepare ourselves in the ranging market so we can maximize our profits depending either when the market is going upward or downward. It doesn't matter because we've prepared beforehand. Thank you for watching this video and good trading.